Hi everyone. Today I'll be talking a little bit about accounting basics. That it's a good to know thing for all of you, even though you're not from an accounting background. And I'll be focusing more on trial balance and balance sheet. These are two very important elements in our accounting. And I'll be covering what exactly is a trial balance and what is a balance sheet and what's the difference and the significance of each of them and how to derive a balance sheet from trial balance because that's how it's done. So, a trial balance is basically a financial statement that is used internally by companies, and it basically lists all the accounts from our ledger or the bookkeeping, as you would call it, and at a specific point of time. It means that if a trial balance is created today, with everything that happened till today, it is applicable only for now because tomorrow we might get more money or we might have to pay more people. So the accounting equation changes tomorrow, right? So it's only applicable for a specific point of time. So you can see that we basically list out all the debits in one section and then all the credits in another section. Debit is basically everything that we have or we have to receive from our customers or and all our assets. And credits are basically what we owe other people. And the trial balance is basically it'll help us identify if there is a problem with our accounting if the debit balance does not match the credit balance. That's how you find out if it's accurate or not. It's basically used for identifying errors in our accounting procedure. Going to the balance sheet, it's a financial statement which is a snapshot of a company's financial position, again, at a specific point of time. So it shows the company's assets, liabilities, and equity section, and how exactly we get our resources financed. Assets are what a company owns, like cash, like receivables. That's basically what our customers owe to us. And different patents, for example, like our company has a lot of patents with respect to like medical devices and medical technology. So all of that will go under patents. And right now, for example, like let's say it's worth $20,000 and we put it out. The asset section has to equal the liabilities and the equity section. Liabilities is what we have to give other people, uh, the banks or our suppliers, the money that we have to pay to them. And equity is basically all the stocks that other people own from our company. And retained earnings is like from the previous revenue, what we are retaining to reinvest into our company. We have to make sure that our assets equal to our total liabilities and equity. Just like in our trial balance, like how debits have to equal to credits over here, assets have to equal to liabilities and equity. Now, I'm going to quickly talk about how to create a balance sheet from a trial balance. The first thing is we need to categorize and list all the accounts in the trial balance properly. For example, the cash, accounts receivable, and inventory will go into current assets, and the asset section is listed in the order of liquidation. Cash is something that's like readily liquid, but an office equipment, it's going to take some time for us to like list and sell it. So it's going to take some time. So you can see that it's on the bottom of the list. That way, we have to categorize and list our assets in the asset section and total it. And we have to make sure this asset will equal to our um, debit section in our trial balance. You can see that it's 295 in the debit section and the asset section is 295 as well. Similarly, we do the same thing for credit balances, but the only difference is the credit balance will go into liabilities and the current liability, the highest one is going to be what we need to pay off immediately. Like accounts payable, notes payable, and wages payable, we have to do it immediately. We can't hold off on this for another year or something. So it's listed over there. Let's say if we have a long-term loan, it would go under another category called as non-current liability. And now we have another equity section over here. And if you add the liabilities and equities, it has to add up to our credit balance in our trial balance. You can see that it's 295 and 295 in our balance sheet as well. And now by doing this, we have created our balance sheet from a trial balance, and we can see that it's equal. The credit, the assets is equal to liabilities and equity in our balance sheet. This way, it's very easy for us to like make sure that it's accurate and everything is captured. Um, Thank you very much for listening to this today. Thank you.